The Fed raised rates. The Fed raised rates. But what does that mean? Hey guys, Cody Gladu, Desrochers Realty Group, eXp Realty. I'm here to answer that question. What does it mean when you hear the Fed raised rates? Okay, so what they are talking about when you hear the Fed raised rates is the federal funds rate, which is actually very different than mortgage rates, okay? And I'm gonna explain to you what the Fed funds rate is. So that is the interest rate at which banks or other lending institutions, financial institutions, lend money to each other. Well, Cody, why would a bank lend money to another bank? Don't they have enough? Great question. Well, as you know, banks have a lot of withdrawals and deposits happening on a daily basis with their clients. Okay. And in the US, regulators require that banks keep a certain amount of capital on hand at all times as reserves to promote stability and solvency in the market. Understandable. So when the Fed raises the federal funds rate, what they're attempting to do is slow the circulation of money between banks in an attempt to curb inflation, which is absolutely what's happening in the US right now. Okay, that makes sense. So who controls the federal funds rate? Well, it is called the FOMC, or Federal Open Market Committee. They meet 8 times a year, and they're responsible for maintaining that sort of equilibrium within the US market, okay? So last week they met and they raised rates by 0.75%. But what we saw was interesting because mortgage rates in most cases stayed very stable, and in some cases actually dropped a little bit depending on the mortgage product that you're looking at, okay? So that's really important news. And here's why nothing really changed in the mortgage market. Because the FOMC likes to share with investors and institutions what is going to happen during those meetings 8 times a year so that they can prepare for that coming, okay? So mortgage rates stayed the same, and in some cases we actually went down a little bit because they already knew that the 0.75% was coming. Now the FOMC will not meet again until September. They're skipping August. They meet roughly every 6 weeks. And what we're expecting, experts are predicting, is a 0.5% increase in interest rates. Remember, that is the federal funds rate, not necessarily the mortgage rate. I want you to picture the federal funds rate and mortgage rates as dance partners, okay? Oftentimes they move together. Sometimes they move opposite of each other. So it's just important to make sure that you always have good information, okay? Now, the response we saw in the stock market was actually promising, okay? Towards the end of last week, so Wednesday through Friday, we actually saw some pretty great gains in the stock market last week, which means that consumers are happy that the Fed is doing what they say they're going to do. We love self-accountable government, okay? So if you have a question, need anything answered, make sure you consult your real estate professional. Obviously, we're professionals here at Desrochers Realty Group. If there's anything we can do to help, please reach out.